moral hazard. You know what that is? That's when investors make mistakes. They take on too much leverage. They overindulge themselves in risky areas of the market. And because of that, they could lose a lot of money and maybe even hurt the plumbing of the economy over a short amount of time, which could reverberate through the rest of the economy. Moral hazard means that if you bail investors out because nobody wants to suffer any pain, then investors are going to take more and more risks, bigger risks, because the feeling is, hey, you're always going to get bailed out by the government. And that's what's been happening on a very consistent basis. We had COVID, we had pandemic, the Federal Reserve jumped into action, cutting rates, buying back bonds. We had the CARES Act, which was the absolute right thing to do from Congress. That pumped about $2 trillion into the economy, first round of PPP loans and all that. We needed it. So now the Fed has $8 trillion. It's printed money like crazy. Shouldn't we stop that? Yeah, but you'll hurt the market. You'll hurt investors. Well, maybe we need a big reset and get this out of the way, because you can't keep inflating one area of the market or one bubble, like in the bond market, to avoid pain in another area of the market, like the stock market. So let's raise rates because the housing economy is too strong. But does anyone have the stomach to put homeowners through pain of seeing their houses decline in value? We can't hurt the homeowners. So you just have to accept that through economic cycles, different groups of people benefit and get hurt. But if nobody wants to go through any pain, or you vote any politician out of office who would put you through any pain, then we're just going to blow up bubbles bigger and bigger until we need another moral hazard to save everybody's hide.